What's going on, traders? Andrew O'Connell with Pristine Capital coming at you with yet another market recap video. It is September 3rd, 2021. Please go ahead, click the like button on this video. Please subscribe to my channel if you enjoy this content. Today we're going to be talking about the price action in the indices. We are heading into the holiday weekend. We have off on Monday, which is awesome. We're all about to have a 3-day weekend. So yeah, let's talk about the price action. The indices will be quick this time. We'll talk about some of my trades for the day, all that good stuff. Before we jump in, quick first disclaimer, nothing in this video should be construed as investment advice or recommendations. Please follow your own trading plan and your own risk parameters. Last but certainly not least, do not YOLO your entire account into any one of my trades, and don't YOLO your entire account into anyone's trades. All right, let's jump into the video. Okay, so indices, what do we have for our box scores? So today, setting the stage, we had the NFP report. The NFP report always comes out on the first Friday of the new month. And this was a very pivotal economic data point because Jerome Powell said at the Jackson Hole Symposium that, hey, if we start seeing some really good jobs prints, that'll be a reason to start tapering the Fed balance sheet to basically stop all of the money printer go burr that's been going on for the past year. We ended up getting a very weak number. We had less than 1/3 of the additional jobs added than were expected. I believe the estimates were about 750K, and the actual number was something very small. It was like 200K. I could look it up again, but yeah, it was just such an underwhelming number. I think it was like 233K. But yeah, so we're going to have kind of an interesting reaction. So box scores, the S&P 500 is measured by the SPY, closed down 0.02%. We had the Nasdaq QQQ finish up 0.31%. We had the IWM small caps finish down 0.46%. And we had the Dow Jones close down 0.21%. Also very noteworthy, the breadth in the marketplace was very poor today. So check this out. We had worse breadth actually in the S&P 500, only 31% advancers. So look at that. I mean, the index is only down 0.02%. The index is basically flat, for all intents and purposes. But literally 69% of the stocks were down on the day. So that's when if you're an active investor, you're not just like a spy monkey. The odds are kind of stacked against you. IWM only 30% advancers, Dow Jones 34%. Nasdaq QQQ is our strongest with 51% advancers. So pretty much what's happening now is, so market participants, they've rallied this market, 6 ways to Sunday. It's been, okay, growth stocks are rallying, value stocks, small caps, large caps, all these different groups for all these different themes. Everything from, oh, the economy's locked down, let's get into these growth names. Then it's like, oh, the economy's reopening, growth is booming, let's get into all the value stocks. Then now we're realizing, oh my gosh, growth is decelerating, and now we're getting really high inflation data. So, oh my gosh, we have to stop printing so much money because the inflation's going up. But oh my gosh, we can't do that. We need stimulus because the economy is slowing. So basically, I don't want to get too deep into it, but our entire economic and financial system is just not viable. Basically, these these elites within society, we kept having crisis after crisis, and instead of kind of taking the medicine, they just chose to print their way out of every problem. And now it kind of seems like we're running out of runway to do that because now we're getting this inflation that's coming in. But with this really weak jobs number, I think now the consensus within the market is, hey, we have to price in slower economic growth, which is what we've been doing. So that's the reason why, a lot of these NASDAQ companies are up. And then also, the market's not going to go down either because, with the slower growth, we might have to still, just keep printing up all this money. So yeah, that's where we were at today. So S&P 500 was down 0.03%. There's something about what's going on right now where this market is like Teflon. And I think it's just for that reason that everyone knows we can't stop printing money. So it's really just like, who's going to sell their stocks? Like when the Federal Reserve is debasing the currency like this, there's really like nowhere to go other than cryptocurrency. Boom. Cryptocurrency is, my portfolio is basically all cryptocurrency. But yeah, the S&P 500, we had a little bit of a shakeout today, formed a little bit of a red candle. But overall, we've just been consolidating sideways. So I have to assume that the path of least resistance in the market is higher, just for the sole reason that, more money printing, more money debasement, market go up. And yeah, this technical pattern, there's nothing bearish about it. I mean, other than this is a slightly red candle, sooner or later, this 20-day moving average is going to start catching up to price. So every day that passes that we consolidate, the market risk actually goes down because each day we're getting less and less extended from the short-term moving averages. Let's look over at the Nasdaq. Yeah, Nasdaq was actually up on the session because, again, we're pricing in that slower economic growth. Russell was the big loser, but even the Russell, this isn't really like a big losing day. We didn't even pull back to the 5-day EMA, so just got a little bit of a shakeout in the Russell so far. And then the Dow Jones finished down 0.23%, still just consolidating. So I think for the most part, the real story behind what happened today is under the hood. So let's check it out. So some nice advancers all within like the software and semiconductors group. So you can see for the most part, everything else was down on the session, but there were little pockets of strength, and those pockets of strength are in companies that are weighted highly enough in the headline indices that the market, is essentially flat. So Nvidia, this was the big winner for today. Let's check out Nvidia. I actually day traded Nvidia. I will say I did leave a lot of money on the table with this one, but that's okay. I had a small winner in Nvidia. And this one, yeah, heading into next week, if this theme is going to continue where let's just bid things that have some sort of growth because, our economic growth is so poor, this one should continue to benefit. So, yeah, really nice move for Nvidia. And let's check out AMD, also within the semis group, up slightly, up 0.66%. So, yeah, some movers to the upside, but a lot more movers to the downside. Let's check out our sectors. Blockchain ETF is our big winner, up 3.1% today. Team, let's take a look at this Ethereum. This is like surreal what's happening right now. So actually it's not. I mean, this is really like what the game plan was all along, but still, you know what I mean. It's definitely like, it's just kind of crazy when it all comes together like that. So let's pull this up. Yeah, so cryptos, Bitcoin pushed up above this pivot. Now it looks like it's coming in. We'll have to see where it closes. Yeah, Bitcoin is above 50,000. And then Ethereum tagged 4,000 today. So absolutely crazy. Ethereum is very close to reclaiming the prior all-time high. So think about it, team. Could you ever have imagined we would be here July 20th? We were at 1734 for Ethereum. We've more than doubled in a month and a half. This is insane. So, I think getting along here is kind of dangerous because we're so extended. But for the most part, nobody really cares about that until the risk hits. And then suddenly everyone remembers, oh my gosh, I need to manage my risk. This is crazy. This is too hard. And then they essentially blow up their accounts. But anyway, yeah, so Ethereum, really nice move. Bitcoin as well. And then some of these just cryptocurrency stocks, like just ripping. So I'm long HUT. This one right here, HUT. So a bunch of members of the Pristine Capital trading community, we're all kind of talking throughout the day. And yesterday, we were discussing like, where do you take a target on some of these crypto names? Because like, they've come so far so fast. But it really depends on your plan for the trade. for me personally, if an asset is just behaving so well and it's meeting and exceeding my wildest expectations, depending on my trade plan, like for me, I'm very bullish on cryptocurrency, you know, for years and years out. So in this situation, you know, I'm not really taking targets in these exposures. You know, I really just want to hold them. They've been so good to me, you know, why would I sell them? But I'm also keeping in mind, look how far away this thing is from the 20-day. You know, so it's going to come in at some point. It's really a matter of when, not if. And I'm willing to sit in for that volatility. But yeah, you know, today just a crazy 19.48% day. So yeah, wild stuff. And then style factors. So style factors for today, we had the momentum style factor, slightly positive. International momentum. So international momentum and international value are our two top performers. So this is another dynamic that is coming into play. That is, the United States, you know, it used to be like the end all be all. Like the United States, you know, it's so much better than anywhere else. Economic growth is amazing, amazing leadership, like amazing culture, like all this stuff. Now, I mean, we've succumbed to the same exact fate that Europe is on, where it's just money printing forever. You can't get off of QE. You became addicted to it, and you're sort of just stuck in the doldrums where you're just printing money or debasing your currency, and you're not really like investing in the future of your country, to be honest. So what I'm really curious about is like, sure, we might see gains in our markets. Like the markets really aren't going down, but I would imagine, and we're already seeing this, and we're already positioned for this, money could start flowing out of the United States. I know that's like a crazy thing to imagine, but we're already seeing that. You know, emerging markets are killing it. You know, over the past maybe like a week or two, nothing too crazy, but the Japan ETF today was also like just killing it. So I believe it's EWJ. I posted this one on Twitter earlier. Yeah, look at this. So like imagine this. So like SPY today was up 0.0 or down 0.02%. Japan was up 2.84%. This is a theme that most investors, especially if they're not active, they are going to miss out on this. So this isn't yet another reason why, if you're diligent, if you put the work in to really be a trader and you watch price action, you can actually differentiate your performance from, you know, your buddies that just invest in index funds, because you're actually cognizant of what's going on. You can put yourself in positions to succeed. Most people are not going to do that. Most people are just, you know, horrible at trading. They end up like blowing themselves up. They have no discipline. They don't manage their risk. But if you approach things like a more mature mindset, not like a childish mindset, not like an addict mindset, you know, you can, I think this is an environment where you can really set yourself apart. And I think that's what we're doing, you know, with the Pristine Capital trading community, you know, with our overweights in cryptocurrency, overweights in EM, you know, different things like that. And we can be nimble. If those stop working, you know, I'll be hitting out of those. So yeah, we'll see what happens. Okay, so those are our style factors. Let's go through some of my trades for today. Let's pull these bad boys up. Okay, so stock trades. So I saw today that the breadth was pretty bad in the market. We got some weirdness on the tape with the jobs report, all that stuff. So I didn't want to be too aggressive. And really what happened to me, so 2 days ago, I had my best trading day in a long time. You know, I talked about it in the recap video a couple days ago, but yeah, a lot of these Chinese exposures and then cryptocurrency exposures really just like hit escape velocity at the same time. I had some call options, like really good sequence. For me, typically when I have a really good sequence like that, I usually end up having a poor sequence soon after where I have like a drawdown of some sort. I get too careless, too risky, whatever. So the way I'm seeing this is like I just had a really nice sequence and the market's showing me like some weirdness, like with the breadth being horrible. You know, these data points are coming out weird, like treasuries were selling off today, like, so I tried not to be too aggressive. So I did take on some PayPal common shares early in the session and I took on ESTC. Let's chat about ESTC for a moment. And yeah, I'm going to speed up a little bit because I don't want this to be too long of a video. But MongoDB reported earnings today. They're like a database data science company for enterprise. And look at this, really nice earnings report, up 26.33%. Guess what setup this is going to form? Guess what setup we're going to be ready for on Tuesday when the market opens? This one's going to be at the top of my watch list. So we'll be ready. If this one confirms, I'm going to be in it. But a really nice setup. So my mindset, ESTC, that is another company in the same exact industry. Maybe that one will also move in sympathy, because MongoDB, I know if I end up taking this, I'll take it on Tuesday. Yeah, I did get long some ESTC and it did move in sympathy. So it was up 4.75%, grabbed some common shares. And yeah, this looks really nice on the weekly chart. So we pretty much traded right up to this pivot area. And it looks like we stopped right at the prior highs. Check that out. Actually a little bit higher than this. Let me adjust my line. Yeah, so literally right on the nose. So maybe we form like a little handle over here. But yeah, I really like ESTC. I ended up hitting out of PayPal just for the reason that, hey, I didn't want to be taking on like too many new longs on a day like this. So yeah, hit out of PayPal. And then I took a target in my DigitalOcean. So I closed out half of my remaining shares for $68.84. I had paid $51.02. So I'm down to a runner size position in DigitalOcean. Look at what this name did today, team. This is ridiculous. So the vibe that I got from watching the price action today was like investors were like, if it grows, get me into it. Like, just get me into anything that grows. Like, that's what this market has come to now, where it's like literally like there's no other like attractive investment opportunities. Like, everything's so bloated. So now it's just like, well, we got to keep bloating these. So like, which ones do we bloat? Like, all right, let's just bloat up the ones that are growing the fastest. And DigitalOcean, to be honest, this one's actually not bloated. It trades at only like 17 times sales. That's the reason why I first got in. Like, this one was just compelling for a bunch of different reasons. But yeah, up 14.51% today. So investors were just panicking into this thing. I did take a target. And this is another reason why sometimes when you take targets, you can actually like work your way out of the best stocks. So in this one, like, I'm down to like a 10% runner. Now I'm like hoping this thing has a pullback, because I'm like, yeah, like now I'm down to a runner size position. If I had been less, aggressive with taking targets, I could have an even bigger winner in this thing. So I've had a really nice run with this one, but yeah, that's just something I'm thinking about, where it's like, sometimes on your best stocks, you really want to take targets. Sometimes on your best ones, when you have a nice cushion, it's like, just let that thing ride, man. Just let it ride. But yeah, so that is DigitalOcean. And then we'll talk about some of my options trades for today. So I closed that out, closed out my PayPal. And then, so I was scalping some puts. And this market is just very difficult to trade on the short side. And I'm actually doing okay somehow, like shorting the market. But I'm just getting these little scalps. And I think this is me, like, I had my really good day on Wednesday. Now I'm sort of like, oh my gosh, the market's going to pull back. So I'm trying to like hedge myself and like catch every little down move. I think, moving forward, I'm going to try to, if the market's trending up, it's trending up. Sometimes that's why it's better to actually not know the whole economic story or like the bigger picture, because you can start to overthink things. In a prior life, when I first started learning investing, so for anybody that doesn't really know my background, so I started off as a pure fundamental like value investor, and I was building like discounted cash flow models. I was doing deep dives on companies, like that was my thing. And I had some success with it, but what I found was like I was always looking for the undervalued companies because everybody learns about Warren Buffett, whatever, and it just wasn't really my style. I still like doing deep dives on companies, and now it helps me because I have that skill set like built out. So I just have a little bit more context for what's going on. Then I became like a global macro head for a while, and I was learning everything global macro related, how these central banks operate, you know, all these different countries, all these different currencies, different economic indicators. Like I really went down that rabbit hole. And then I pretty much realized like global macro, it's not that it doesn't work anymore, but with what these central banks are doing, it's like, you know, you find that the economy is slowing, and that's not a short signal. A lot of times it's a long signal, because that means the Federal Reserve is going to stimulate. So I've done like all these different walks of life within the investing world, and really what resonated with me the most and where I really started just ripping the market was when I started just trading price action, price volume volatility. I absolutely love it. I think you can mix in fundamentals as well, and just like market context, you know, like the news essentially. But yeah, sometimes I find like I used to be a huge news junkie, like reading Bloomberg articles, reading everything I could get my hands on. What I noticed was reading the news made me depressed, like not literally depressed, but like it definitely alters your mental state. And I notice almost everyone I know that consumes a ton of news, they're that same way. Their mental state, they're always paranoid. They're always like thinking about what bad could happen, like whatever. So yeah, sometimes I find, you know, long story short, that was a tangent, but basically what I found is sometimes ignorance is bliss. If you're just trading the chart, you're not thinking about what's going on in the economy, you're not thinking about when's the Fed going to taper, blah, 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 you can actually do much better than if you're thinking of those. So that's my goal for next week. I want to make sure I'm not letting, you know, thoughts of the Fed or whatever like enter my process. It's just my process of price, volume, and volatility and doing that. So that being said, yeah, I took some IWM puts, and yeah, I closed out some of them. I closed out a third for a winner, 341. I'd paid 314. Then I closed out the other 2/3 for 307. I paid 314. So overall, I ended up winning that trade. It's like I probably made like 10 cents, and that was like the hardest one, you know, 10 cents I've ever made in my career. So just to give you like a little context. And then I had some lotto puts for the QQQ in case the jobs report came out really strong. I was able to hit out of those for a small winner, but that too was like just hitting out, like getting the winner before the Nasdaq like went against me. It was just like, you know, it's like so much hassle for what it was worth. And so what I decided was, I was like, instead of just like trading in and out of these puts like every single day, trying to like catch the window of weakness, I just entered into a put spread on SPY. So I was like, okay, I'm gonna put this on for September 24th, which is a week after OPEX, and I put on an out of the money put spread. I got the 448 by 440 spread for $1.43. So that's, you know, risking $1.43 to potentially make, I believe it's $5.57 or $6.57. Yeah, it's an 8-point spread. So odds are this hedge is not going to come in handy. Odds are this will expire worthless. But if we do get some weakness, you know, this hedge will really come in handy. So that's kind of what I need, just like a put spread. Market's trending higher, but, you know, you want to be prudent, especially when you've had a nice run of performance. You don't want to give it back. So I was like, hey, let me just throw this on and, you know, just kind of forget it and do my thing. So yeah, put that one on. And the other thing I added was, I am just long so much cryptocurrency. I'm so overexposed, but in a good way. You know, I did that consciously. And these positions, they've grown so much that now they're, you know, most of my portfolio, my trading account is cryptocurrency related assets. So I did buy some coin, which is Coinbase. I bought some puts for October. Really all that is, like when we get a dip in crypto, and of course now it feels like, well, we're never going to get a dip, but we always get dips. So when that happens, it's not like this is going to really hedge me out. Like I'm still very net long, but it's at least like I have something on. So I'm not going to be like in despair when these things correct. It'll be like, oh, okay, you know, I'm losing on my Ethereum, losing on these other positions, but like, you know, it's at least prudent. I have one hedge on. And if it doesn't work, it doesn't work. Then that means I'm crushing it on my other exposures. So I have that coin hedge. And then into the close, I really just came to this realization, like, the market might just not even want to give anything back right now. Like, if it's just debasement all day, like, I gotta just roll with that. So I ended up taking Datadog some calls into the close. Last thing I want to go over before we break, geez, this is a long video. The Chinese equities are looking amazing. So I'm loving these into next week. Check this out. Check this out, team. PDD. Oh wait, this is the weekly chart. Pinduoduo. This is just beautiful price action. So we got this nice gap, consolidated for a couple days above the 20. Now, boom, we pushed higher again. Now we're consolidating and retesting that 50. I think sooner rather than later, we're going to be up here at 120. I think we're going to be up here at 140. So let's get ready. Then Futu also, was on its back at one point, and it closed not too bad, only down 0.62%. So I'm pumped for next week, but also I am pumped for the weekend. After Wednesday, it was like, I just want to get to the weekend already, because I just want to enjoy, for a couple days. I am going to be doing my weekend market analysis video. I am going to be doing my weekend watch list video for all Pristine Capital members. If you're interested in becoming a member, feel free to sign up on pristinecapital.net. If you have any questions, feel free to reach out to me on Twitter. Feel free to email me, anything you'd like. I'm always open for a chat. That being said, hope you all have an awesome 3-day weekend, and I'll see you all next time.